Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Wealth Matters podcast. Hope everyone is doing great today. If you are listening to this on Apple Podcasts or Google Podcasts or any other podcast platform, please subscribe and like. And if you can, leave a review for me. That would be very helpful for the growth of this podcast. Today, I've been talking about cryptos in all my Monday podcasts for, I would say, past 4 weeks or so. So I want to talk about real estate deal, a duplex, which I had owned before. We just closed last week. So I wanted to share about that. And actually, because I'm trying to move from small properties into larger properties, I want to start selling some of my portfolio. And actually, most of it is sold. I only have a couple of duplexes left in Atlanta, Georgia market. If you are interested, do reach out to me because we may be able to make a deal. That's how we made a deal for this duplex, which is located in Davenport, Iowa market. And I'm not going to share the address because a listener from this podcast have bought it from me, and he's got a great deal if I just look at it from pricing perspective right now. And I'm pretty sure he's listening. He's a good friend of mine. So of course, he will be able to see what I did from and what price I bought. Of course, he can see that from public record as well. And when I sold it at little lower than market price because I didn't want to go through realtor. And while the tenants are inside, I don't want to bother them going through listing and whatnot. So it just worked out for both of us. He saved $5,000. I saved the realtor fees. So it was a win-win. And that's what I like to create. But let's talk about this duplex I bought in 2017, my very first duplex. Before then, I had only bought single family residences, right? So this is when I was trying to move from single family into multifamily. So that year, 2017, was a breakthrough year for me because I bought a 9-unit property in Ridgecrest, California, this duplex in Davenport, Iowa, as well as a 9-unit to close out the year, 9-unit property in Birmingham, Alabama, which I still own and I'll continue to own because that property is doing good, knock on the wood. And actually, this duplex has done amazing for me. Funny, I have never seen it, right? But that's how the process is. When I have my first investment, when I lost all the money, I said, I should have looked at it. But, that's how I started. And then once I started building the team, I realized I need to start relying on the team. So for this duplex, all in, I paid around $87,500. And when I bought it, I think the turnkey provider had bought it for 60 something and they were going to rehab. They did the rehab and all of that is included in the purchase price. The only caveat was that you had to buy it cash. So I bought it cash in 2017. And then I started looking at it. It was rented for, when I bought it, both units were rented for around total $525 each. So $1,050 per month. And it started going up at some point when it reached $1,150 a month. I said, okay, why shouldn't I try to refinance? And that's what I did. So this was the BRRR deal, which I did not plan. And I'll talk about another BRRR deal which I have done. And BRRR means buy, rehab, refinance, rinse and repeat, basically BRRR. So basically you can buy it, rehab it, refinance it to pull most of your equity out. And this somehow worked out, even though I had not tried to do the BRRR, but it was actually after 1050, I was getting about 500 a month in my pocket. So that was still 6,500 in my pocket after covering all the expenses for 87,000-ish investment. So it was not extraordinary, but it was not bad either. Of course, in that time, everyone wanted over 10% return, right? So I let it season for a year and a half, and then I refinanced. And funny, I got the loan for it appraised, and I thought it will appraise for 95-ish, maybe close to 100. It appraised for 105, so I was able to get a mortgage for 72,000. So I had only 15,000 in the property by that time after 1.5 years. And the next 1.5 years since I own, I got the rent, which so basically my 15,000 has been returned fully, right? So first year I got about 6,000, the second year, so around 10,000 I already had in my pocket when I refinanced. And then after refinance, I was receiving about $200 a month, plus the rents have gone up as well in my pocket. So after paying mortgage and everything, I was receiving about $200 a month. So long story short, I have about 15,000 in my pocket, which is what was left in the deal. And we just sold that property. When I looked at it and when I spoke with others, should have, if I would have listed, it would have sold for around 140,000, right, in 3 years. And of course, all the property values have gone up. So it's nothing that I have done. It just worked out. And a lot of time, as I have mentioned on the podcast, I love to be transparent. I always talk about my failures. So this was, of course, a success story. So I wanted to bring that up. But I have also failed a lot in real estate when I was starting using my IRA as well, where I invested with a syndicator and lost about 50,000. Very famous celebrity or syndicator. If you want to know his name, feel free to reach out to me. So it would have appraised, easily sold for 140,000. But one of my listeners, and who is a good friend who invests in that market, he reached out to me saying that, would you sell this duplex? And I, sent him the numbers. And right now, the duplex is making 1,400 per month. That itself is huge, right? So it's beating 1% rule. And if I would have sold it at 140K, I would not have had any trouble whatsoever, because it's still meeting 1% rule, right? So that shouldn't have been problem. And it was making 1,400 a month. So when I told him that I will sell it to him for 130,000, he was very happy. So I basically created a win-win situation and maybe a lifelong friendship as well with him, because I saved about 5%, which I would have paid to realtor, as well as a lot of headache. We are listing this, the tenants need to be out, this, that. So this just worked out so well. We closed last week for 130,000. When he got it inspected, he was very happy with the condition. All of that was checked well and good. So I'm very happy for myself and happy for him as well. And I hope he can make even more money from that duplex. But going back to my story, basically I netted about 50,000 after paying off my mortgage, after paying off all the expenses and whatnot, the attorney fees. This has worked out really well. I had no money in the deal finally when I sold it, because I had got all the rent. So if I zero out all the rent for 3 years, my ROI of around 50, actually 53,000, or maybe it's close to 55. That's infinite basically, because I didn't have any money in the deal. So this is how it worked out, and this is how real estate can change your life, right? So cryptos are great, but they are like stock in some sense, because they are very volatile, and some of these cryptos can turn to zero. But real estate is real. It's a real asset. It will not turn to zero, and if you do it right, you will definitely come out ahead. So hope you enjoyed this episode. Let me know what you think about this episode. And if you're watching on YouTube, please like and subscribe. Again, have a great weekend and have fun.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.